Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome to the show, everyone. It's great to be here with you. Seth, Samuel Case, and your host, the one and only Mark Manila. Mark, it's good to have you, brother.
Well, thank you. It's good to be here. And welcome, everybody.
Yeah, great to have you, folks. Hey, give us a call right now. We'd love to talk to you. Phone's open for the next hour, 610-363-1110. Call in, 610-363-1110. Grateful for each of you joining us this morning on our many outlets, radio, TV, social media, the chat, of course, the website. Welcome to all of you. On today's show, your calls and questions. Also, what do we do when there is a halt on a stock that we're trying to either sell or buy? We'll discuss this. We had this happen recently for us, so we'll talk about it. But first and foremost, guys, let's take a look at our top story this morning and look at sectors, particularly sector rotation. Sam, give us the details here. What exactly is going on? Why do we need to know about it?
Well, it's not just any sector rotation, Seth. All the analysts are calling it the great sector rotation, because now the industrials, basic materials, and communication stocks are right now beating out the tech sector, which is, I believe, in number 4, as software companies have been taking an absolute beating in the first few months of 2026. Really, it's just been a month and a half, but you know what I mean. For example, industrial stocks, Caterpillar and John Deere, they're up around 30% year to date, while mining stock Freeport-McMoRan is up about 20%. On the flip side, meanwhile, software stocks, Oracle, Salesforce, Adobe, and companies like that, those are down between 20 and 30%. Although it's not all bad news for the tech sector, there are good areas such as data storage. Companies like Western Digital, Micron, and SanDisk doing incredibly well this year, and that's almost an understatement, as SanDisk, for example, is up over 100% since the start of the year.
Interesting. So, Mark, how common is this? We see sector rotations, and what is it that causes them?
Well, sector rotation is like the weather. It's the most common thing in the markets. It happens all the time. It's normal. This isn't anything to be concerned about. It regularly happens as, capital, as investors respond to changing economics or changing market conditions, or just different sectors that the valuation have spiked in. It's really nothing unusual. In fact, it's a good thing. One of the reasons we do asset allocation is so that we can have a little bit of each sector as the rotation goes. You're already in a sector that maybe the money's coming out of, say, software and going into things like metals or industrials or things like that. You're already somewhat there, so it's receiving that, and those are being boosted up. That's one of the benefits of being having diversification in your portfolio. But this current rotation, it's interesting. It's driven by massive AI infrastructure investment. I mean, the idea is we got to build all these data centers, and to do that, energy is needed to power them. And to do that, there's infrastructure needed. And to do that, and so on and so forth. So really, what's really happening is with the infrastructure investments going into basic materials, industrials, and those kind of areas like you were talking about. I think you mentioned, Cat and a few others.
Cat and John Deere are some big ones.
Yeah. Yeah, they make equipment that's necessary to make these things going on.
It's kind of weird. It's almost like investors are moving out of the tech sector, at least in some places, in order to prop up the tech sector, if you know what I mean, because it's going into materials to build up these tech sector data centers.
Yes and no. Because part of it is also money moving from a sector that had spiked, like software. Software had spiked, the valuations were through the ceiling. So what happens is people start locking in some of their gains. We say that over and over. Don't get too greedy when you see things double, triple, or 8 times or 10 times their original investment. It's time to lock in your gains. It doesn't mean you have to get rid of that stock, but lock in those gains so you can then redeploy that to where the money's going to go, because eventually it's going to go somewhere once the valuations get over the top. So in this case, money's moving to industrials and materials and things like Well, the administration has put a focus on rebuilding America, manufacturing, and those kind of things. We're seeing monies moving to those areas where the focus is. So it's a good thing. It's a really good thing.
Mark, you know what's a really good thing too? I love this, and I'm hopeful that our partners are able to reap the benefits of this as well. But we've got plenty of options available on the buy list in each of these sectors we're talking about. It's not like the tech sector is going away at any time soon.
No, not at all.
Right? Like we're still going to see a lot of that, but there are a lot of options in the industrials as well, and they certainly have done well. It's just like you said, Mark. Good asset allocation is really good, and it's really going to help you long term.
I wanted to ask Mark. So when there is a sector rotation like this, does that necessarily signal unhealth in the sector that we're moving out of, or is it more of just a relative strength thing? All the sectors that we're looking at are strong. It's just some are a better opportunity right now than others.
Yeah, there's a lot of semantics in what you're saying.
I realize
that. or relative strength, those kind of things. Those all the different words people use for it. What it really comes down to when we say one sector is doing better than another, what we're actually saying is that sector, more money's pouring into it, forcing those stocks in that sector to higher levels, higher valuations, and money's moving out of other sectors. So it is a relative strengthening. In fact, when we look at the different sectors, I look at relative strength first and foremost from the sector to sector, 12 different sectors, or 40. Sometimes I go real deep on it. But in general, I'll do more of the broader sectors and look at the relative strength in them from one to the other. Oftentimes, I'll just use a proxy for that sector. For example, an ETF that represents that sector. So it might have all the different stocks in that sector in that ETF. And therefore, I can compare it to another ETF in another sector that has all the stocks in that sector. Which one's rising faster and maintaining that, or falling slower in a down market than the others? That relative strength. And then you compare them all to each other, and you come out with what are the stronger sectors, or what sectors are the ones that are rising faster, would be the easiest way to look at it. And because of that, we've seen money moving out of things like technology, banking. There was a couple of others that have slowly been falling, the finance and the software sectors, so tech sectors, and moving into more infrastructure type structures, like I said, basic materials, industrials, things like that. In fact, right now, when I take a look at what's going on in the different sectors, I'm seeing industrials, basic materials, energy, communications services as the stronger of them all. They're the top quartile of them all. Then technology comes in next after that, but it's continuing to fall, which is very interesting, which means its relative strength is getting weaker and weaker. That's probably more in the weeds than you really want to go, but yeah, that happens. I
opened up the can of worms. I'm sorry, guys.
I also look at a different way to do that. You can take all the stocks within a sector. You can look at how many of those are on what you would call a buy signal. I say what you would call, because almost everybody I know who manages money or who analyzes money has a different formula for what makes something a buy. What makes something a buy. So I use my secret sauce formula, what I think is a buy, and I determine how many stocks in this sector are in a buy, and is that increasing or decreasing? Is it increasing or decreasing faster than all these stocks in this other sector that have stocks on the buy? That's called the bullish percent. So I'm doing a relative strength not only on valuation, but also on buy signals or bullish percents. So you combine those two and you start seeing what industries seem to be the strongest right now. I think the term you were using, Sam, is healthiest. Those are okay terms to use. And which ones are rising and which ones are falling in their strength or health or power. So
yeah, I used health because I recognize that you could have other sectors that are doing better than other sectors, but that doesn't mean that the sectors that are doing worse are necessarily quote unquote unhealthy. You know what I mean?
Right. For example, communication services and energy. They're right around the same place right now in my measurement, but energy is rising and consumer services is falling relative strength-wise to one another. So I see energy as, you could say, that's in better health because it's getting stronger, where communication services is weakening a bit. That doesn't mean it's bad. And also, one other thing to talk about, in the different sectors, let's just say there's 130 stocks in the basic materials sector. I don't know, making up a number for illustration purposes. Well, there could be a dozen or so that are going through the ceiling, and the rest could be going through the floor. And then when you average it all out, it looks like that's a weak sector. So there's a lot that goes into it, a lot more than probably we should be dealing with on just 13 seconds that we have left. Number here is 610-363-1110. If I confused you, give us a call. If I didn't, give us a call.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Investing is about so much more than money. It's a way we can provide a better future for our loved ones and make a greater impact for the things that matter most to us. Good stewardship is investing in things that last for eternity and not things that go against biblical values. For over 25 years, Financial Issues has provided partners with the tools they need to build a portfolio that honors God and blesses others. Become a partner with Financial Issues today to see how you can steward your resources in a God-honoring way.
This Valentine's season, we invite you to join Financial Issues and Preborn in a mission to save babies and transform lives. Your donation of $120 can make an extraordinary difference. This amount represents the average number of times an unborn baby's heart beats in a single minute. To donate, dial pound 250 and say the keyword baby, or go to financialissues.org and click on the Preborn banner.
Great conversation here this morning, folks. If you want to join us, we'd love to hear from you. 610-363-1110. This is, Mark, a two-way conversation. It's the three of us guys talking here, on this side of the camera, but there's another side, and that's you all. And we want to hear from you. So give us a call, 610-363-1110. Mark, speaking of the other side, the partners, Karen, who's 67, has a great, not just partners, but listeners, by the way. We're so grateful for any of you listening. Karen, who's 67, has a really good question that's in line with what we were just talking about, Mark. Okay. She's saying, I'm rebalancing my portfolio and I need to add to the consumer discretionary sector. I have CD80 currently, and it's dropped below 1%. It's still on the buy list, or at least, Mark, it was when Karen wrote this question. Doesn't seem to be doing well currently. Is it a good time to add to it to bring up that sector? I also have other stocks in that area doing well, but they're not on the buy list. What would you say to Karen, Mark?
Excellent question, first of all.
Yeah.
And it helps us to look at a little bit, what do we mean by buy list and hold list? When something's on the buy list, we're saying it's worth putting money into right now. It has not reached what we thought it was its potential in the short or midterm, and that it's worth continuing to put money. When we put it on a hold list, it doesn't mean that the company is breaking down or it's just a step before it goes to the sell. It just means there might be some rust or some cracks in the fundamentals, but nothing huge enough to say sell it, and it still has potential, or its potential is slowed down for the moment as money is shifting in turbulent times, like when there's a major sector rotation like we just talked about. So what has happened with the one stock you're talking about, the CD80, is that it is actually caught in that area where it has been valuation-wise been coming down slowly over the last year and a half. Internally, actually, there's some things improving in its fundamentals. I think they've reduced their debt a little bit over the last few years, which is a good thing. But we're still just looking at it and saying, okay, right now, it really doesn't have, in this turmoil, it doesn't have the potential to be making any money. We'll just keep our without any outside influences happening to it. We're just saying maybe it's not a good place to be putting new money. On the long run, it might do well, but right now, let's wait until it's in a better position to put new money in. So we have moved it to a hold from a buy. So Karen, I'm sorry that it was a hold and now it's a buy. So I would say don't be putting new money into that. If you can find other stocks to be putting money in, the consumer discretionary sector is a really hard one right now. Right now, it's in the lower quartile of strength of what we're looking at, and we're concerned that we're having a hard time finding stocks right now to put on the buy list. So that doesn't mean you're in trouble or there's panic or anything like that. It just means a lot of the stocks have their fundamentals have a little bit too much debt, or their potential has pulled back, things like that. So, and when a sector gets that way, it's okay to let that go underweighted for a while. You know, you can put the money in some of the stronger sectors, such as we were talking about, basic materials, energy, things like that, and that would be okay. And you wouldn't be that far off in your asset allocation anyway. And if you looked at the concept of corridors meaning, okay, I'm only going to put 3% in the stock. If it grows to 6%, I'm still okay. Even if it doubles, the corridor gives me that. And technology, because of the volatility in technology, you have wider corridors. You don't usually just sell right away in that. You wait until it grows a bit, and then you prune it back just to somewhere in its corridor. So you can be a little overweight in some other sectors if you can't find anything into the consumer discretionary area.
And folks, listen, if you're listening to the show today and you're wondering what we're talking about with CD80 and different things like that, those are our FISM specific codes that we have for specific stocks. That's partner information, of course. If you're not a partner, you can become one now and you can get that information. Sometimes on the show, we'll share what these specific stocks are. But if you're curious about that and you want to become a partner, you can do that at financialissues.org.
You want to be in the know.
Exactly. You really do. Mark, I'm glad that you mentioned that, because it's a question that I've wondered too when we talk about measuring the strength of a sector, and also what do we do if we are trying to fill out a sector that's not very strong? And because it's not very strong, there might not be a lot of options on the buy list right now. It's not any sign of trouble. It's actually a feature rather than a bug, because you have determined, I think wisely, that right now there aren't a lot of good buying options in that sector. So if someone like Karen really wants to fill it out, but she can't yet, should she just wait? Is it okay to just wait and be a little bit underweight there?
For sure.
Okay.
Oh, absolutely.
Awesome.
You can underweight that sector. You could go ahead and you could overweight some of the stocks that you feel confident about in that sector that are on the buy list, or you could just go deploy it elsewhere into a stronger sector. Now, I'm not suggesting that if your asset allocation says you should only have 10% in sector A, and now you're at 40%, that's okay, because that's not. You're way over the balances there, way over the corridors there. But we're talking about a short-term thing, possibility, and on top of that, we're talking about a few percentage points of this sector being over or that sector being under, which happens anyway as individual stocks grow in valuation or decrease in different sectors. You know, we saw that with the technology sector. We're pruning back lots of things in the technology sector, trying to keep it within the asset allocation range that is supposed to be. But we don't have to keep it there every day. We just watch it, and then we look at the individual issues, and we make sure they're not way over for that sector. You know, if you have one stock that's gone up 800% in a sector, probably you need to prune that back, because both the sector and that stock are way out of balance. And when you do that, it starts pulling things in balance. This is not a panic type of thing. What it really is it's guidelines that help you stay on the right road of managing both risk and reward simultaneously. And that's what stewardship's about. It's not just about reward. It's also about managing God's assets in a way that you are able to protect them when possible, and or allowing them, preserving them when necessary. So sometimes the asset allocation will get out of line because things grow too fast. Sometimes it'll get out of line because some things drop hard and there's not enough stocks to really replace it in there as those stocks become sells, and or their financial issue, fundamental steel decays, or their potential just goes away. A perfect example of that, by the way, is the software industry. It ran up through the ceiling. Software software became from you buy a software package to where you rent it. You know, think about your operating systems and that kind of stuff. Now you pay an annual fee for those kind of things for all your software. That industry just grew on that utility type of income creation for them. Well, now with AI, we're seeing a lot of the software companies are starting to, revenues are starting to slow because AI is starting to generate better code than a lot of the companies could. So they're downsizing, they're doing all these things. So what we're seeing is not totally, but we're seeing an adjustment here of a product or an industry that is constricting because of AI, because of new technology. We saw that with the automobile and the horse. We see that over and over again with different things in the world. So some things can become obsolete, is what it is, or start becoming obsolete. And as that happens, we need to be moving those monies into other areas.
Mark, I appreciate you bringing that up. Not to switch gears totally here, but I feel it's necessary for us to do so, Mark, with the time that we have left in the show. Mark, did you know that abortion disproportionately impacts people of color? 7 out of 10 abortions are done by women of color. Black women comprise 42% of abortion recipients. White women only 30%. Hispanic women 22%. 7% other races. The left seems to conveniently forget this statistic, understanding the actual reality that abortion is actually racist. Not only is it, crimes against boys, crimes against girls, crimes against women, but it's also racist. That's why we're so thrilled to stand with Preborn as they lead the charge against this vile, demonic evil, Mark.
It doesn't matter what color you are. Yeah. It doesn't matter what income class you're in. You're alive. God loves you. Yep. And if you're in the womb, I know you can't hear me, but you're a life that God has ordained to be brought into this world. He brought your mom and dad together one way or another. We forget that. We put all race aside. I don't even want to talk. Yeah, originally abortion in America was brought on by racists who wanted to
exterminate black people.
Yeah, exterminate black people. Yeah, okay. Put that all aside. Yeah. We're past that. It's not about race. It's about life. It's about a baby's life. It's about the next generations of brain surgeons, of those people who are going to find the cures for the cancers that we haven't found for the last 200 years. It's about bringing children into this world who will grow up to be great men and women who will run this country, who will build the streets, who will build the skyscrapers. It's about caring and love. That's really what it's all about. And talk about love. There's the organization Preborn is all about love, loving the baby, loving the mom, loving God and bringing all three together to help save babies' lives, to help more babies be born, to help mothers embrace their children. This is an incredible organization, and they're in the middle of a fundraise. I know we hate hearing all that fundraise talk all the time, but this fundraise helps to save babies and moms and bring love back into the world. And they're calling it the Heartbeat Heroes. By donating any amount, you become a Heartbeat Hero. And I'm a Heartbeat Hero. I would like you to be too, because there's nothing better than bringing more love into this world. And this is what this is all about. It's about love, not politics. It's not about power. It's not about money. It's about love, loving life. You can become part of that with $20 or $20 a month or $20,000 one-time gift or whatever God puts on your heart to do. You just go out to Financial Issues, click on the banner, and it'll take you right to a donation site, and you can join me and many others in being a Heartbeat Hero, saving babies' lives, saving moms' hearts and their future and their emotional status, and saving many people for eternity with the gospel. I hope you'll join us, and I hope you'll stay with us to our next segment, where we got a whole lot more coming up. 610-363-1110.
Did you know that an unborn baby's heart will beat an average of 120 times per minute? That precious sound is the sound of life. This Valentine's month, would you join Financial Issues and Preborn as we celebrate heartbeats? Your tax-deductible donation of $120 or any amount will provide free ultrasounds, counseling aid, and the gospel message to a mother in an unplanned pregnancy. Become a Heartbeat Hero and give monthly to make an impact and save lives over and over again. To donate, dial pound 250 and say the keyword baby. That's pound 250, baby. Or go to financialissues.org. That's financialissues.org and click on the Preborn banner. Become a Heartbeat Hero and give monthly to Preborn as they seek to save lives.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
back, folks. Great to be here with you. Hope you'll consider becoming a partner with us today at financialissues.org. Okay, Mark, for our partners here, actually, we had some interesting things happen this week that I'd love to get your insight on. A couple folks sent us email messages asking about the most recent sell that we issued this past week on CyberArk. So here's basically what happened, Mark. CyberArk was halted effective immediately following the after-hours session around 8 o'clock p.m. on Tuesday. So this was a couple days ago, pending its acquisition by Palo Alto Networks. The halt is expected to continue through yesterday into today.
Seth,
suspension
can you explain
of trading.
what the halt means?
What's that, Sam?
Can you explain what the halt means?
That's actually what I'm asking Mark to do. That's exactly what I'm asking. Yeah, Mark, what's going on here?
It doesn't matter as long as it gets answered.
Exactly. Yeah, Mark, what should we do if we see this? Because a lot of people saw this. They tried to sell it, and they said a halt came up. I don't know what to do with this. So what's exactly going on here?
Well, yeah, when a halt comes up, there's nothing you can do with it. What it is it's exactly what it says. The exchanges can no longer buy or sell this for you. You cannot make any moves on it because SEC regulations say at a certain point you have to stop the sell of this or the buying of this to allow the merger to conclude. So it's not a bad thing. It's routine merger-related halt as Palo Alto Networks closes the deal here. So It's not a sign of distress or regulatory trouble or collapse or bankruptcy or any of those other kind of halts or market drop halts, things like that. It's just that they have to do it to finalize the deal. That's really all it comes down to. I mean, there are others where it could be bad, but this isn't one of those. So it just means trading is ended until the merger is closed now.
And you know what's interesting about this one, Mark, is this company is being bought out by a company that we're holding as well. It's, Palo Alto is also on the hold list. So it's not going to change too much, I think, for our partners. It's not like it's being bought out by a company that right now is not biblically responsible or going private or something like that. What should they do then for those who missed the boat and weren't able to sell CyberArk and now just have this new reality of whether it's cash or shares of Palo Alto? What do they do?
Yeah, they're just going to have to wait, and they don't have to do anything. And they can't do anything. So they just have to, you just sit and wait, and the brokerage firm will take care of it all. As the merger gets done, you'll end up with like $45 in cash for each share of each of the shares of Cyber, and you'll also receive 2.2 or so shares of Palo Alto per share. So your brokerage will automatically process the exchange. Then after it's all done, you'll see it in your accounts, and we'll take a look at it, and you say, okay, is Palo Alto still on a buy or a hold? We'll buy or hold it. If they're not, if it went to a sell, if we have a concern with them, let's just say they went dirty. Palo Alto decided to spend a lot of dividends that should have gone to you and me on supporting ugliness, anti-biblical, anti-family, anti-God stuff. Well, then we issue a sell on it. Otherwise, we just say, hang on to it, take the cash you received and redeploy it into the areas to help balance out your asset allocation.
See, Sam, isn't it so much better having Mark do it instead of me?
He's so articulate.
That's right. He's so good with his words. Thank you for that, Mark. Very good. Awesome. So, yeah, folks, if any of you were asking about that, wondering that, no big deal. And if you need to go back and listen to it again, please feel free to do so on the podcast. You can get that on our website, by the way. All right, Mark, here's an interesting question. And Sam, you had mentioned this particular company earlier when we were talking about the transition from tech into industrials. Gary, 76, Mark, is saying, hey, Mark, SanDisk, should I consider selling? I'm up over 1,000%.
What a terrible problem.
That's right. I feel so bad for you, Gary. Or should I keep more? Should I to gain or replace with a different stock? What should I do?
You know, Gary, that's an incredible blessing. Yeah, and I know you know that, and we all do. God has been so good to so many of us here at Financial Issues as partners and Financial Issues family. You know, we look at this and we think, thank you, Lord. One of the things we need to do is always get back to stewardship. Stewardship isn't just about trying to get the most out of the market as you can. It's also about preserving what God has given you to be deployed to for his purposes, to his glory. not only how we invested, but what we do with those gains and those things, along with caring for you and your family and those God puts in your place. There's reasons for that money. So we want to manage the risk. We also want to manage the rewards in that. So when you have something that's growing like that, and there's no reason to be selling it because maybe the fundamentals, like in SanDisk, I mean, come on, the fundamentals are incredible. They got gobs of cash. Their earnings, everything is spectacular. It's a good company. The only reason it's on, I believe it's on a hold still, isn't it?
It is right now, Mark.
The only reason it's on a hold is because its valuation has shot up so high. We were concerned about somebody new coming in and putting money in at a peak and then spending the next 2 years waiting for it to get to another peak.
It's up 1,700% over the past year.
Yeah. Wow. So we put on a hold, realizing that that it still has so much potential and still has financial issues still in it. We don't want to just sell it, but it does make sense to lock in some profits, get it back down in the corridor, bring it back down. It is way overweighting your portfolio if it's 800 times or 1,700 times more than it originally bought in at. So you want to trim it, you want to prune it, lock in those gains and find another stock to be moving into, or multiple stocks to be 8 stocks to be moving into with that money, because you probably went in at 1 to 3%, and so you're probably going to trim back between 3 and I'll go out and say, because it's such an aggressive stock, 10%, trim it back down to 3 to 10% of your overall portfolio. But you don't have to get rid of it, because we believe it has incredible potential yet. We believe that with what's going on in the AI world, with building all these data centers, they need the memory. They need the SanDisk product, and they are backlogged, and they are increasing their earnings. They're increasing profits by raising prices because they're so backlogged in their products. So it's still a good product. And I don't think you should run in fear, like your hair's on fire, sell everything off there, but you should prune it back. You should lock in some of those profits, a good portion of them, I would say, and then let the rest do it again if it's going to do it. In fact, I'll tell you what, this is something I shouldn't say probably on the air, but I've been looking at this stock, and probably for the last 2 weeks, I keep saying, we should put this back on a buy. And as soon as I say that, it goes up 10, 17%. And I say, you know what? I'll wait till it pulls back. But we're leaning towards a buy, but with a caveat.
It's been more than a couple of weeks we've been having that conversation, I think.
Yeah, but with a caveat on this. Here's the deal. This is a very aggressive stock. When you see valuations like this, it's just crazy. But it doesn't mean they can't be a whole lot crazier. And it doesn't mean that over the next 3 to 5 to 10 years that it won't continue to go up. But it will be highly volatile. So I would say that if you're a growth-oriented person, if it comes back on the buy list, if we decide like today to put it back on the buy list, we'll put it back on as aggressive, and we'll put it back on with a caveat of you might avoid this if you're in an income portfolio, or you don't sleep well at night with 10 to 20% swings in a stock.
So basically,
you might want to avoid this.
Mark, this would be, assuming we did this, if you've got a little bit of Sam Case in you, maybe this is
just a little taste.
Just a little
taste of it,
Measure
right?
your amount of Sam Case you have in you based on how much.
I don't know. I'm reading some of the comments, and some of our partners did ride this thing up the whole 1,700%, and I don't know if I'd have the intestinal fortitude to do that.
Well, we're going to call this the case virus going forward. If you have if you've been infected by the case virus and you sleep well at night with those 20% swings, it's okay. But get it in line, a little bit more in line with your portfolio. And when God blesses you, when God sends you something, and that's exactly what happened, and you're 800 times richer because of it, you might say, thank you, Lord.
But Mark, I want to be 900 times richer.
Yeah, that's called greed, Sam. That's part of the virus that we're talking about.
That's great.
We don't manage money on greed and fear. We manage it on stewardship, honoring God in all we do. And it's okay. We don't have to make 1,700%. It's great that we did. But let's lock some of that in. And if it continues to go in, that's great because you still have a portion in there. Very important to understand the difference between pruning and selling. Pruning means we prune back, we harvest our gains on it. We don't plow it under. We just harvest our gains and allow it to blossom more. Selling it means we harvest the profits and we plow it under and we plant something else.
Absolutely. Mark, you shared this with me, and I love it so much. I'll share with our listeners. Pruning is not out of fear, but it's really out of wisdom. You look at your gains while you're participating at a reasonable level, and you be wise. That's what we're trying to do, is just to be wise.
Absolutely. We want to be stewards, not just investors, not just worldly greed and fear chasers, but godly men and women who are balanced in honoring God in all we do, including our investments. Yeah, that is exactly what we want to do and continue doing.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
Would you join Financial Issues and Preborn as we celebrate heartbeats? Your tax-deductible donation of $120 or any amount will provide free ultrasounds, counseling aid, and the gospel message to a mother in an unplanned pregnancy. Become a heartbeat hero and give monthly to save lives over and over again. To donate, dial pound 250 and say the keyword baby, or go to financialissues.org and click on the Preborn banner.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Great to be here with you, folks. We still got time if you want to call in. The number is 610-363-1110. Do hope you'll join us for Bible study tomorrow morning at 6:30 a.m. Eastern Time, where we'll learn about what it means to be doers of the word and not merely hearers. So looking forward to that. Mark and Sam, the markets yesterday kind of stayed close to the flat line. Not much movement north or south. They ended technically negative, but it really wasn't that far down at all. The Dow Jones and the NASDAQ both down around 0.1%. S&P 500 basically flatlined, and the Russell 2000 was down right around 0.2%. Futures this morning were looking good, and the markets have opened relatively strong with the Dow Jones and the S&P 500 up and the NASDAQ down slightly. Meanwhile, the Russell 2000 is up, creeping towards a full percentage point, right around 0.5% right now. All right, guys, let's talk about this crazy story that Sam had found. It's an opinion piece, Sam, if I'm correct, right?
Yeah, from Investopedia.
Give it to us, Sam. What
I just want to get Mark's reaction to this. So the title is Trump accounts are supposed to help children build wealth, but could they worsen inequality? Well, let's find out. Well, according to the article, Trump accounts could give wealthy families a big advantage as they can more easily make additional contributions, but lower income families may struggle to contribute to the account, meaning the program could widen the wealth gap rather than reduce it. Now, this whole article is based off of an interview with a guy named David Radcliffe, and he's the, get this, director of state and local policy at the Institute on Race, Power, and Political Economy at the New School. So not the old school, this guy's New School. So he says, this is a direct quote from him, quote, "If almost half of Americans are having a hard time affording their lives, a lot of folks just won't be able to set aside dollars in Trump accounts. Importantly, that would broaden and deepen the wealth gap, and particularly the racial wealth gap in America." This guy Radcliffe instead is proposing this left-wing idea of baby bonds. These are public bonds that you would automatically be enrolled into and would only really benefit low-income children. They wouldn't be for everyone, particularly minority low-income children. So, Mark, what is your reaction to all this? This whole idea that Trump accounts are somehow discriminatory in some way, and even this whole idea of wealth inequality, which really drives me nuts because it doesn't really tell you anything about how wealthy you are. It just talks about how wealthy you are in comparison to someone else. You know what I mean?
I do know what you mean. And I will tell you right now, the number one issue here is you and Seth and I are going to have a talk after the show because you're just baiting me is what you're doing.
No, I'm not going to deny that. That's 100% what I'm doing.
And that's just not right because this whole thing is so out of whack and so wrong. You know what? I think you started off talking about money. Wealthy parents could fund them better than impoverished parents. Well, okay, but let's look at the family unit. Has wealth really moved anywhere? If you know, Seth, since he's a multi-billionaire, since Seth takes money out of his account, puts it in his newborn baby account, the money still stays in the family. There's no new wealth created there. It's just stayed in the family. So there's no inequality there. But first of all, this comes down to these new accounts are totally blind to color, to income class and everything else. Any parent can open an account for their child born between January 1st, 2025 to the end of Trump's term, and they will receive $1,000 from the taxpayers to go into that account. It doesn't matter what color you are. It doesn't matter what income bracket you're in. Everybody gets that. That's called equality, not inequality. This guy is race baiting and he is a power seeker. This is crazy. Now, maybe that's the worst case. Maybe he's not. Maybe he just doesn't go that deep and realize what he's saying. Maybe he's just a little bit shallow on this, and I'm sorry to hear that. The whole idea of taking money from the rich and giving it to the poor, I don't think anybody believes that Robin Hood he may have had a good heart, but he was breaking the law and he was breaking everything that God's word tells us about.
Wasn't he also not stealing from just the rich? He was stealing from the government for overtaxing people, right?
Yeah, he was stealing from everybody. The real.
That's my libertarian reading, I guess.
Yeah. So let's just really think about this. This lower incomes. One of the other things about this that proves it different too is, Michael Dell is going to put money into accounts of over 5,000 kids randomly. Other corporations are jumping in. So if you're a lower income person and you have a baby, you not only get $1,000 if you take the time to open that account for your child, but you also get corporate money. And also there's nonprofits that'll be popping up, that'll be funding these without race or income or anything qualifications. Money can come from you as a parent, even if you're impoverished, or it could come from grandparents, or it could come from friends, or it can come from churches or corporations. This just opens up a world of possibility for low-income people to help their families raise up above the poverty level. So no, this guy is off base. He's wrong. Unfortunately, I think that because he brings race into it and because he brings the idea of taking from one person to give to another. He's bringing socialism into it with his quote baby bond idea. I think he's off track, and at best he's just shallow. At worst, he's a race baiting power monger and using it for that.
Yeah, it really aggravates me because it always comes back to this idea that somehow there's only so much money out there, and that if someone else is making a little bit more money than you, they're somehow wronging you because now you don't have as much access to that set amount of dollars out there. It just really doesn't make any economic sense.
Guys, I would love to keep on going with this one. I know we're coming to the end of the show, and we've got Al in the call queue.
Let's go to Al.
We need to continue this conversation on tomorrow's show. But yeah, Mark, let's do that.
We're not going to continue this. You're not going to keep me in there.
Let's get to Al here.
Hey, Al, welcome to the show. Glad you're with us. What's on your mind?
Yeah, I'm a little confused with the sell down part. I know if you got profits, you basically just sell the shares that it's going to take to equal the amount of profit that you want to, pull down. And is that also the same with a mutual fund, though, if you're going to hold it?
Oh, yeah. Yeah. Mutual funds, let's say, mutual funds, just like individual stocks, you can have a mutual fund. For example, we saw the Timothy Plan defensive strategy just shoot up last year and at the end of the year, and it was time to prune that back, lock in some of the gains. So you would just bring it back to within your limits. Now, we don't use the same percentages in mutual funds that we do in individual stocks. We say keep it to 1 to 3% with your initial investment so that you don't overweight it too much going in. With a mutual fund, remember, the diversity is in there. You buy a mutual fund, you're buying anywhere from 60 to 600 stocks and other securities within that mutual fund, depending on the mutual fund. So you could have hundreds of stocks in that mutual fund. So you could buy, 20% of your portfolio could be one stock if it fits the allocation. One mutual fund. For example, if you're in the fixed income and you lean more aggressive than conservative, but you still want it to be in the fixed income, you might be in the high dividend fund and maybe the Timothy Plan bond fund more so than you are in like T-bills, in a T-bill fund.
Okay, when it comes to your portfolio tracker, is it okay to like I know you got the fund portfolio asset allocation, and you got your FISM asset allocations, which are mainly stocks. Is it okay to kind of combine them two in a healthy way?
Yeah, Al, I was going to joke and say, even if I said it wasn't, it doesn't matter because everybody's going to. Absolutely, it's okay to do that. It's a transition for a lot of people. So I use mutual funds to broad brush industries or to broad brush asset classes or to broad brush sectors, for example. If there was
what do you mean by broad brush?
When I say broad brush, I mean, I'm not picking individual stocks. I'm buying a bucket of 160 stocks by buying a mutual fund. So that broad brushes, for example, fixed income. I might buy the Timothy Plan fixed income fund for fixed income, but then I might go out and buy some individual preferreds to overweight that a little bit and get a little growth there. So yeah, if you're in the fund asset allocation, you may want to pick and choose some stocks here and there in different sectors because it's harder to get the exposure you want in there. So yeah, and there's no problem with that. And if you're in the all asset, the FISM allocations, you may want to take a mutual fund and say, you know what, I need more small cap growth and I just can't find the individual stocks I like. I think I'll just buy the Timothy TPSC and cover that.
That's great, Mark.
Yeah.
Hey, Al, it looks like you might have a second question based on our call screening there. So, Mark, if you're okay with it, maybe we can hang on with Al to the end of the show and we can see if he has that follow-up. Al, if you're good with that, why don't you just stay on with us, brother?
All right. Yeah, that makes total sense because we only have like 30 seconds left to say that we love our listeners, we love our partners, and we love the Lord, and we're glad you do too because you who are impacting the society for Christ. It's you who are changing the corporations by the way you invest. And if you keep doing that, keep honoring God, we'll see our civilization more and more come closer to the way God would want it until he returns. So thank you for loving God, and thank you for investing with integrity. God bless everyone. We'll see you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.